Investment and risk. An investment is a choice to put your money or your time into something that can grow. Instead of letting cash sit still, you place it into an asset with the hope that it will earn more over time. That asset could be a share of a company, a government bond, a small stake in a friend's startup, a simple fund, or even a first step into real estate. Every investment carries risk. You could earn less than you expected, or you could lose money. Higher risk usually comes with the chance of higher reward. Safer choices tend to grow slowly. The goal is not to gamble. The goal is to take informed, calculated steps toward a future you want. When you start young, small amounts can grow through the effect of compounding. Earnings can generate more earnings, and the process repeats. Imagine placing a little aside each month during your studies. 10 years from now, you will thank your past self. This is how you prepare for big moments like education, a first home, travel, or building your own business. There are many ways to invest. Savings accounts and term deposits are steady and simple. They pay modest interest and keep your money safe while you plan your next move. You can also invest in buying stock shares of a company. If the company grows, your piece can rise in value and sometimes pays dividends. The price of your investment, however, can swing in both directions. Bonds are loans to governments or companies, and they usually pay a set interest, with lower day-to-day movement than many shares. They tend to be regarded as a safer, more cautious investment, depending of course on the government or company you are buying bonds from. Real estate can bring rent and long-term growth, but it needs planning and patience. Funds such as mutual funds and exchange-traded funds gather many investments into one basket, so you can spread risk with a single purchase. Pension schemes help you build long-term security and often bring tax benefits. Newer options like cryptocurrency and forex trading demand a lot of extra caution because prices move fast, and many scams do exist. For most beginners, a simple fund that tracks a broad market is an easy way to start learning with less stress. Risk and reward are two sides of the same coin. Safer choices usually offer lower returns. Riskier choices may grow faster but can drop sharply. Ask yourself how you would feel if your investment fell for a while. Would you stay calm or panic sell? Knowing your risk tolerance helps you pick the right mix. There are smart ways to manage risk. Diversification spreads your money across different assets, so one bad day does not sink the whole ship. Asset allocation is the balance you choose between groups such as shares, bonds, and cash. Review your mix from time to time because life changes and markets change. Keep an emergency fund in cash so you do not need to sell investments during a rough patch. Set clear goals before you invest. Short-term goals need safer and more liquid places for your money. Mid-term goals can handle a balanced mix. Long-term goals can benefit from growth assets like broad market funds. Understand the power of compound interest. If you invest €1,000 at an average return and leave it to grow, next year you are earning on the original amount plus last year's gain. Add regular monthly contributions. Starting early matters more than starting big. Make space for investing with a simple budget. Track what comes in and what goes out. Cover needs first, enjoy some wants, and dedicate a steady slice to savings and investments. You do not need a large income to begin. You need consistency and a plan. Choose tools that match your level. Mobile investing apps are easy to use, but read the fees and make sure the platform is regulated in your region. Traditional brokerages offer more choices but may feel complex. Investment advisors can set a portfolio based on your goals and risk tolerance for a small fee. Investing is a journey that rewards curiosity, patience, and steady action. Start with clear goals. Build a simple budget. Use diversification to manage risk. Begin with an amount you can afford and keep going. To learn more about investment and risk, visit our website youthsense.eu. YouthSense is an Erasmus Plus project co-funded by the European Union. Our mission is to equip young people and youth workers with the financial skills, digital tools, and entrepreneurial mindset needed to thrive in today's world.